Good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to webinar on importance of poor high and poor low. And as usual, the session is getting recorded and will be posted in our YouTube channel and also in our webinars channel as well. So before getting into the session, just give me a quick confirmation about the audio and video quality so that we can straight away kickstart with the session without any delay. So there is a Q&A box is there where you can go and comments. You can place your comments. You can place your questions over there. So hold your questions for a while. So I'll be taking questions at the end of the sessions, and I'm going to take most of the questions today. All right. So let's get into the session here. Little bit about me. My name is Rajendran. I'm the founder of Market Calls and co-founder of Algo Mojo, and I've been trading in these markets since 2006 onwards. My screen time experience is predominantly on tools like market profile, order flow, and systematic trend following. So in today's case, we're going to look into what is poor high and what is a poor low. So first of all, before trying to understand what is poor high and what is poor low, we need to get some basic idea about how the traders think and how the investors think in the markets. All right. So how many of you are investor here or an investor plus trader? How many of you, right? If you are, just simply type yes in the Q&A section so that I can have a fair idea how many investors or how many investors plus traders. I'm not talking exclusively about traders, but I'm just talking about only traders plus investors. How many of you are traders plus investors? Okay, Kanaya says he's just a trader, and Giridhar is a trader, and Deepak Kumar is a trader plus investor. Neeraj is both, and Anand is a trader. Pramod is both. Vivek is a trader. Bhagat Singh Tomar is a both, and Sanjeev is a trader. And T plus 1, that's what CN Shah says. And Pedi is a trader. Maheshwaran, Madheshwaran is a trader. Pradhan is both. Satish is yes. I mean, that means he's a trader plus investor. Shiva Subramaniam, Expedia, AV Raj, everyone is a trader plus investor. And the list goes on and on and on. Most of them are trader. And yes, equally, we are having trader plus investor as well. So I guess this session is going to be a very, very important and interesting session as well. So this session talks about how traders think and how investors think in the markets and how we can visualize using market profile. That is what we're going to look into the session, because market profile itself is more of a visual tool. Right? It is not a tool to do some kind of a mathematics on top of market profile. We don't do mathematics on top of market profile. So it's more of a visual tool. So since it is more of a visual tool, practicing market profile itself more of an art rather than a science. All right. So so think about this question very closely, right? So who watches the price very closely? Who do you think who watches the price more and more? Do you think traders watch the price more, or investors, they'll be watching the price more? You can just place your answers in the Q&A session. Whom do you think? Traders or investors? Myself, that's what Ilangovan is saying, probably. Of course, yeah, everybody is getting the answer right. So, of course, the trader is the one who is going to watch the price action minute by minute, second by second. However, investors, they don't pay closer attention to the price. They maybe once in a while they'll be watching it, right? So there are a couple of investors, they'll be watching in the morning what the markets are doing, and then the afternoon or whenever they have some free time, right, they'll be watching the price, what it is doing, even though they are not actively involving in the markets. They once in a while they watches the price, or whenever the price is reaching some near threshold level like 12,000 levels, or some round figure levels like 10,000 levels, kind of levels, investors, they care about such kind of references. Or maybe there are places like all-time high, all-time low, or multi-year high or multi-year low, when those kind of levels are gonna get broken, right? Those are the places investors pay attention. Maybe let me list down some of the levels what investors watch, and then we'll come to the traders, because traders are completely different. The behavior of the traders are completely different from the investors' behavior. All right, so let's go and pull out some of the levels what the investors watch. Of course, I guess, yeah, some of the levels investors watch. So what are the levels? Let's list it down here. I want to list it down here. So one is what? One is they generally focus attention on, let's say, whenever an all-time high is broken, all-time high or an all-time low. So ATH means all-time high, ATL means all-time low. Whenever such kind of all-time high, all-time low is broken, then investors, they pay more attention to the price. Probably which recently, name any stock which you are watching where it is hitting an all-time high. What could be that stock? A stock which is hitting an all-time high and you're watching those levels. GMM fodder, right? So I guess mostly in that, it's a talk in the town among the investors. Reliance, of course, last couple of days. TCS, for recently TCS, there was a buyback announcement, and then it was hitting an all-time high, and all of a sudden it's a darling for the investors. I mean, almost most of the investors, they are aware about which are the stocks which are hitting all-time high, because they, whenever the price is reaching the all-time high, maybe it could be picked up by the screeners which are used by the investors. Our most of the investors, they prefer using something like a 200-day moving average on a daily time frame, right? 200-day moving average. What else are investors will watch? Maybe trend lines. Trend lines. Maybe trend lines is watched both by traders as well as investors. So it's investors will watch on mostly on daily time frame, a daily, right? Not on the hourly time frame or 5-minute time frame. Mostly investors will be working on the price levels at daily, or probably some traders at weekly, some investors even on monthly scale. One of the investors which I had spoken to him, he even considered using quarterly, right? So quarterly. And of course, most of the big funds, they prefer to have an idea about what is happening on the quarterly time frame and monthly time frame. Now, what are the other levels they'll be watching? Maybe whenever the multi-year breakout, multi-week breakout. So those are the kind of levels investors might be watching. Multi-year breakout. How many of you see this? So I guess most of the people here are equally investors as well. So how many people watch multi-year breakout and multi-month breakout as well? Multi-year and multi-month breakout. What are the other things they'll be using? Mostly Bollinger Bands on daily time frame. Investors could be watching Bollinger Bands, BB Bands. What else? Mostly they focus on fundamentals, right? Fundamentals are kind of value investing. So they mostly focus not only on the price, they also focus on the value. They'll be always focus on the growth of the stock, other factors like PE ratio, EPS, lot many things they'll be watching. Investors are not only focused on the price. Price alone is not a deciding factor for the investors. Probably price is one of the factors which decides the investment, but it's not the only factor. Right or not? Investors are not driven only by price. Yes, sometimes madness drives the investors, kind of momentum investors, they come and jump in and then they play along with the momentum. But however, remember, most of the times investors, rational investors I'm talking about, most of the rational investors are not driven by price alone. Irrational investors, they see the price and they, without looking into the value of the price, they just simply go and buy because everybody is buying, stock is going up, everything looking green, and there are no bad news in that counter. Probably we are in a Goldilocks kind of situation, right? So that's how the irrational investors, they just simply go and chase the price. However, this is investor sentiment. However, the traders' way of looking into the markets are completely different, especially the institutional traders. Institutional traders are there are also institutional investors as well as institutional traders. I guess you guys would have been agreed. There are a lot of traders. I'm not talking about the retail traders like us. There are also traders who can handle a bigger size, and at the same time, those traders also watch the price levels. Like, so they watching the price level is completely different from the investors' behavior. So most of the investors, right? I mean, most of the investors, they don't watch pivot levels, right? So very few investors might be watching here and there, maybe. But most of the investors, they pay attention to some form of pivot levels, some form of pivot. It could be a CPR. Last week we discussed about CPR, right? So CPR levels, CPR. What else? They'll be focusing on mostly the midpoint levels, midpoint. It could be like high plus low divided by 2, or high plus low plus close divided by 3. This is also kind of a pivot, or it could be a midpoint. People can use it as a pivot. Or the traders also watches previous day high or previous day low. So remember, I'm not talking about chart-based traders. Chart-based traders, they might be watching indicators. That's a different class of traders, right? So most of the retail traders these days have access to the charts from the brokers. Earlier, during 2005 or 2000, even till 2008 as well, right? So the charting is not provided by most of the brokers. Of course, last 4 or 5 years, brokers started providing charts because brokers started improving their tech on their side, and brokers are now coming up with trading view charts, chart IQ charts, charts on the mobile phones, smartphones, tablets, right? So as the technology is expanding, brokers are also providing more access to the retail traders. However, most of the institutional traders are not chart based traders. They don't trade the charts because they are the one who creates the charts. Remember this point very clearly. Big traders, they don't watch the charts. They don't watch the charts. Why they don't watch the charts? Because they are the one who move the price. They move the price. Right? They have the muscle power to move the price. Probably something like Nifty, they have the muscle power to move the price by some 20, 30, 50 points, or even 60 points also. So who watches the price? I mean, who watches the charts? People like us, we watch the charts. Is it bad? I mean, there's nothing really bad over it. It's a one style of trading, nothing much. Because we cannot move the markets, by the way, right? So because we are small traders, hardly we can play how many lots? 5 lots, 10 lots, 20 lots, 25 lots. With 25 lots, we cannot really move the markets. Even if you're coming with 100 lots also, you cannot move the markets. But there are a bunch of big traders. Maybe in the numbers are less, maybe hundreds or in 200s in Nifty futures. They have the substantial money flow to move the market. But still, at the end of the day, ultimately, still they are traders. All right, they also watches these kind of levels. They watch some form of price levels, nothing much. They what the price level they can remember. Mostly they can remember previous day high, previous day low, or what they can see on the trading terminals. So what are the levels you can see on their trading terminals? Maybe previous day high, previous day low, and previous day settlement close. So previous day settlement close. So these traders are mostly full-time, right? So they're not part-time traders. We know that because mostly they also belong to some form of an institutions or some form of a hedge fund. So ideally, these traders also watches the price. They watch the price and they are also sensitive to price. When price moves against them, just like every other trader, they also close their position, or maybe in the worst case, they may go for some sort of a hedges. Now remember, here comes the fun part. They watches, like every other trader, they watches the price very, very closely. Now you can ask me why they are watching the price very closely. Any idea why they are watching the price very closely? Why do you think so? Why? Right, the why is the question, right? It drives most of the traders. Why they watch price very closely? So watch the price closely, or why they were paying close attention to the price. They are watching the price very closely because they are traders. Very simple. Right? They're not investors. Investors, they don't care about the price hardly, right? So maybe let's say I want to buy, let's say, some stock like Reliance. Let's say I want to hold it for the next 5 years. Why I have to watch the price every now and then, or why I should react to that price just because price is coming to some yesterday's high or yesterday's low? Why an investor will come and buy exactly at previous day high or previous day low? Mostly these traders are the one who comes and trades very near to this level, previous day high, previous day low, previous day settlement close, or maybe today is open, right? So today is open. Of course, you might be able to see these values in your trading terminal, right? Maybe if you are using Nest trading terminal or any other trading terminal, you should be able to see by default. Maybe if you're using modern trading terminals, like what brokers are providing, the web-based trading terminal, it shows some other different information. But look at the traditional IBTs or the dealer terminals, where you'll be able to see these levels, all these flickering screens with the blue and red color flickering all the day. Maybe you would have seen if you went to any old broker office, right? The dealers will be punching the orders, and the screen will be flickering blue and orange, or blue and red, by the way. So, however, price-based traders are there in the markets because they can dominate the markets. What they can do is, so these big traders, they can dominate the markets. Now, what does it really mean? The dominating the markets. See, dominating the market is one form of controlling the markets with their price action, or the way they are punching the orders. They can dominate the markets. They can take control of the markets, which is what we're going to look into it in the form of poor highs and poor lows. So most of the traders, they trade the exactness. Not every trader, but most of the traders, most of the big dominating traders also, they trade the exactness. And the market profile is one of the visual tool to understand such kind of exactness. Maybe you may not pay close attention if you are using any other charts. However, I can show you a couple of exactness which happened in the recent couple of days, and what is the significance of those things. Maybe you might surprise the way such kind of exactness is happening in the markets. However, the exactness is what kills the traders also. Maybe this is a behavior. The exactness is the behavior very, very common among the retail traders also, small traders also. Not only it is very common among the big traders, it is very common among the small traders also. Like many at times, we would have been used this kind of an support. Assume that this is my support, and the price comes to that support. I want to enter exactly my entry comes at these levels. So trader trying to enter exactly around those levels. So they are looking for exactness. They are looking for perfection. So traders looking for a perfect entry and perfect. Traders are the one who look for perfection, right? Investors, they don't care about the perfect entry or a perfect exit. Traders care about perfect entry. Traders care about perfect supports. So let's now come back to the real topic over here. So what is a poor high? First of all, to understand what is a poor high, we need to understand what is a good high or what is an excess. So excess is end of one auction and the beginning of another auction, where a significant number of TPOs get traded at the tail. So we know that each and every letter we call as a TPOs. So look at this example. Look at the bottom tail. Bottom tail we call it as a buying tail, right? So this is called as a buying tail. Imagine this buying tail. Let me. So this is a buying tail. Look at the tails here. A lot of single prints are there. A lot of single letters are getting traded over there. Maybe if you see these places, there are two letters into two letters over here. Here again, two letters over here. So at the tails, you can see single letters. So how many TPOs are there? Let's count the letters. 1, 2, probably 3, and 4, and 5, and 6, and 7, 8, 9, 10, 11. Total 11 letters, 11 TPOs are there at the tail with single prints. Whenever it is more than 2 or 3 TPOs, right? I mean, more than 2 TPOs or 3 TPOs, we can call that as a good high, maybe a good excess. We call this as a excess. So excess is what end of one auction and the beginning of another auction. If you look at the top, if you see in this particular example, how many tails we are able to see at the top of the tail. So bottom of the tail, right, we call it as a buying tail. So buying tail. And top of the tail we call it as a selling tail. Selling tail. So how many letters are there with the single prints? Only one letter, only one TPO. One TPO, or if there are no TPOs at the tails, we call it as a lack of excess. We call it as what? Lack of excess. There is no excess there. Lack of excess. When I say lack of excess, that means it is a kind of an, so this particular day, this is very close to a double top. Double top pattern. It's not a perfect double top pattern, but it is very, very close to a double top pattern. How do I am saying that? Because you see that maybe the price, you know that every half an hour a letter will get generated. So the price keeps on going up and up, and up and up that particular day. Maybe at the K period, you notice the K period. So here is the K period high. So this is K period high. K period, it is forming a top. Then again, what is happening? Price is pulling back a little. Again, price is coming back to the L period. L period, what is happening? Price went only 1 point. You see that only one TPO above the K period, it went up only one TPO. So that is L period. And again, price went down again. Again, selling was happening. And again, price is going and closing, touching very near to the K period. You see that? So you see how many times the price is defending at those levels. So it's like price going to a point, assume that this is a point, price going to a point and it is getting sold. Again, price is going to that point and getting sold. Again, price is going to that point, maybe a little bit of overshoot and then it's going down, or from that exactly it is coming down. So this is what we called as an exactness. Exactness. Obviously, some trader is responsible for that. Some trader is coming and doing such kind of exactness. Imagine that the investors, they don't care about such kind of levels. Traders are the only selling that. Obviously, in that case, you can know that some stops would have been built above those levels. So if somebody is a smart trader, right, they can go back and easily break such kind of levels. So that's what a poor high means. Poor high is mostly a high which is done by traders. Is it weaker? Not necessarily. Many cases it is weaker, but some cases it may not be a weaker also. All right. So there are many trading level importance to the poor high. Poor high and poor low, definitely it is an important reference level to watch out. It is neither a target or a stop loss or something else. But because we don't look into poor high alone. Poor high, I see a poor high and I don't take a trading decision. Means I don't see a poor high alone and then I don't take a trading decision. Or let's say, think about a poor low. Poor low is an opposite of poor high, right? So look at the lows here. The H and I are exactly same. This low is a poor low. This low is a poor low because you see that letter H and I, it's like letter H, 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 H and H. I mean I. Notice the I here. I. The distribution structure, the difference between H and I is only one TPO. 1 TPO. I mean, the better example, right? It's like go and watching the last Monday's price action. You just go to the, let me go to the Nifty profile structure. So here is the Nifty profile structure. Last Friday, you see that there is an AB power formation is there. Let me remove this aside. Just focus on this information here. This low. So both are same low. This is a split profile and this is a regular profile. It doesn't matter. So it is like, if you look at the structure here, so A has been A went down from the open. So from the open, right? So here is the open, day's open. So from the open, letter A went down. And notice B period started moving up. Probably A would have been went down and then it would have went up and then B period would have started. So B started coming down. And then it formed like an AB power low. It formed like an AB power low. It's a very important reference level from an intraday perspective, from a positional perspective also. But it formed as a power low, right? So these kind of power lows are kind of a dangerous power lows. However, you see that how exactly, so it is like price opening, from the open price went down, again went back up at A period, and again B period, what is happening? So here is it establishes a low, right? It establishes a morning low, early morning low, like today's low. We call it as an early morning low. That is also one of the reference level most of the traders watch out. So early morning low. That is first half an hour low kind of. Then what is happening? Price is coming exactly. It breaks the early morning low by only one tick. So last Friday, right? This is 1 TPO difference. So in this case of 1 TPO difference, it exactly broken by only 1 TPO and it bouncing back. You know that this is done by traders. This is not done by investors. Traders are the one who is coming and buying around those levels. A very, very important one. Maybe if you could see that at the open, traders are coming and buying. So at the I period or J period, whenever somebody is buying exactly at the level or 1 TPO above or 1 TPO below, we call that as exactness. So what is exactness? What is exactness? In market profile terms, exactness means price is bouncing exactly from a certain reference level, which is watched by the traders. Look at the exactness. Is what? Exactly touching or 1 TPO above or 1 TPO below. 1 TPO below. Below. For example, think about this line. Let's say this line is what I am watching, or maybe this is a line traders watch. Assume that this is the level traders watches, those levels. Whenever the price is doing some sort of an exactness, let's say price opened over here, price opens over here, it comes down and it bounces exactly from those levels, bounces from here, and then B period starts. So according to me, this level is an exact levels. This is an exactness. Somebody is watching these levels. Who watches those levels? Who watches these kind of lows? Again, traders watches those lows. Multi-day low. This is 2-day low, right? Somebody was watching the 2-day low and then they're coming and playing those levels. I'm just giving an example, right? So let me show you a couple of examples here, how traders watch those exactness. The perfect example is Reliance. In Reliance, right? Been watching Reliance. Reliance is getting more and more weaker. I'll tell you why. See, look at this indicators. In indicators, there is a control here for the TPOs. You can control the TPO size. I can make it as 10, apply. Or I can make it as 20. 10 means 50 paise TPO. 10 means what? Kind of a 50 paise TPO. Forget this level here. Now focus on these levels, 5th and 6th October. What is happening around there? This 5th low at I period and 6th low at I period. What is the letter size I'm using? I'm using a letter size of 50 paise TPO. I'm using a letter size of 50 paise TPO. How do I know that 50 paise TPO? Software setting is what? 10 is the TPO size. That means 10 multiplied by the tick size. Tick size is by default 0.05. That gives a 50 paise TPO. So each and every letter indicates the price action of what? 50 paise. Now notice the exactness. Able to see that we exactness here? So who does this? Traders or investors? Investors hardly care about those levels. So some of the big traders, maybe some prop traders or some trader who have the muscle power to move the markets, when the price is falling, it is like, probably you would have seen this one, right? Maybe in your childhood you would have watched this movie. Not a movie, but then a TV show where Krishna will be in with this finger, right? So with one single finger, right? The little finger, he'll be holding that mountain, right? So something like that. So when the price is coming exactly to that level, the traders are coming, lifting the price. They're punching orders and they are lifting the price. So this could be done by that trader. So maybe we can call them as a big trader, right? In market profile term, we call them as a short-term trader. Short-term trader. So end of the day, he's a trader. He might be buying here. He might be exiting somewhere else. He might be closing his position somewhere else, closing his position either here or maybe here. Or when the price goes against them, he will try to close his position. So somewhere he might be closing. Forget where he is closing. We are not interested in where he is closing. Maybe we might be later interested on where he is closing. But at this point of time, when you're watching on the 6th of October, mid of the day, you're watching this I period low and price is stopping exactly at those level and price is moving away from that level. So what's true should strike in your mind is that, yeah, some sort of an big trader are the one who is responsible for such kind of price action. That definitely it cannot be done by some small traders alone. If somebody want to push the price right from 2212, so this price level, let me tell you the price level on that particular day is what? It's around 2212. From 2212, there was a shift move came and then they pushed the price towards 2224. At all points move, half a percentage move. Half a percentage move, 1% move, 2% move. These kind of moves can be done by whom? Such kind of small, big traders, like short-term traders. They can do that. So, however, maybe this kind of activity also, last Friday's activity also, if you could see, it is not exactly one TPO, but two TPOs difference. But still, this also can be done by the traders also, right? So this kind of activity also could be done by the traders. Price went only 1 point below in Reliance, and somebody is pushing the price. This is not exactly I don't call that as a weaker low, because anything one TPO down or one TPO above, we will call like a weaker low or poor low. But in this case, what is happening? This is exactness I'm talking about. This is exactness. Now, these kind of exactness happened at many places, and that has a significant importance to those such kind of levels when it comes to market profile. Maybe I'll show you a couple of such kind of visual reference levels sometime back in Reliance. So maybe here, watch out this level on 22nd September and 23rd September. Not only on 22nd September, but imagine what is happening over here. So imagine, probably, let me draw a line here. This 29th and 30th September. This is 29th and 30th September. So look at the exactness here, how exactly they've been pushing the price. Here the difference is 29th high, the L period high, this L period high, and this A period high. Well, how many TPOs difference do you think? So just, you see this exactness, 29th high and 30th high. Is it exactness or not? So who is coming and selling, initiating the selling here? Some big traders are coming and initiating. And of course, does the market went in their favor? Yes, market went in their favor because sometimes market moves against them. But these kind of activities usually have the odds of price coming and revert back, because when traders are the one who is punching the orders, so usually stops would have been formed around those levels. So when price goes against them, they will liquidate. They simply exit their positions. And price will always, as per the auction profile principle rule, price will come back and trigger such kind of levels, because it is done by whom? Done by a trader. It is not done by an investor. So wherever the traders are initiating the trades, right, usually the price having the odds of coming back and revisit. That's what one of the auction theory says. Wherever the traders are initiating, price will have the odds of revisiting back towards such kind of levels. So this is not the only level. However, if you look back, this particular level also, here also, this is very close to the investing reference. This is not an investing levels, but it is very close to the investing levels. But yes, this level is quite kind of worth watching. These kind of levels are an indicating that we call this highs, right? We call this high as a weak high. Weaker high. It's not a poor high. Poor high means kind of a double top or a double bottom from an intraday perspective, whereas this is what we call as a weak highs. Weaker high. And now what we are having? Now we are having a weaker low. It's not a poor low, but it's kind of a weaker low. And look at this. This is a poor low. This is a poor low, again done by traders. Traders are the one who is coming and competing there. Traders are the one who is coming and competing over here. So a lot of traders are coming and competing in this band, right? So more and more traders are coming and competing here. So more and more stop loss could be found in this zone, right or not? So more and more traders are coming and competing in these zones. Not only there, so very close to that, they've been buying at various levels as well. Of course, they've been coming and buying at these levels as well. These levels, there are levels here. So traders has been dominating this range. So when this range breaks down, obviously a good selling pressure could be happening on the downside. So maybe price going and breaking down, the odds of more downside can happen in Reliance. Reliance is kind of looking kind of a weaker one. Maybe even more weaker on the downside if these levels are likely to get broken. I mean, more to that is there. This is not the only information we'll be watching. This is one of the information we'll be watching. So in Nifty, we had a poor low. If it is done by letter A and B period, we call it as a kind of a special poor low. Maybe you may not find it in textbooks, but we call it as a AB poor low because it's a poor low which is done at letter A and B period. Not only that, there are various places you can figure out such kind of poor lows and weak lows. So a classical example here. Look at this example. So here I'm using a different TPO size to explain what is happening over here. This example here, it is a poor low, HNI. The period, the difference is only one TPO. One TPO difference or no TPO difference, we call it as an, on the same day, we call it as a poor low. It is a poor low on 5th of October. But remember, 5th October and 6th October lows. Both the lows are again exactly same. It is not only a poor low, it is also a weaker low. What is a weaker low? Today's low and previous day low are exactly same. So we call it as a weaker low. So it's not only a poor low, it's also a weaker low. Means it is kind of a crowded buying is happening. More and more traders are coming and competing there. More time a trader is coming and playing around those levels. Again, look at this level, 7th October and 9th October. So I'm just putting in one TPO difference over here. It's still a Reliance chart, but in this case, I'm using a slightly a higher TPO size. One TPO is the size. Every 1 point in Reliance, it will plot the profile structure. So if I plot at this, you can see such kind of visual reference levels over here. Maybe if you're watching charts, right, we may not give more importance to such kind of levels. But these simple structures, we call it as a simple nuances or intraday nuances or short-term nuances, can be used to derive context what the traders are trying to do in these markets. And that is highly critical information. That could be a valuable information for the people like us. That explains what traders are attempting to do. Not only traders, you can also, there are various places you can figure out investors, what investors are trying to do, what fresh money is trying to do, or whether you can figure out whether it is a fresh money or old money. Various things we can understand from the market profile structures. So a very simple comparison here between the weak lows and poor structures, weak structures and poor structures. Weak low, wherever you're seeing an exactness around previous day high, previous day low, or times you might be seeing an exactness around today's open, half back levels. Half back is nothing but high plus low divided by 2. Or yesterday's close, or at prominent point of controls. So those are considered as a weaker structures, weak lows or weak highs. I mean, typically it is not a weak thing over here, but it's a weak low or weak high. So that's a small typo over here. So maybe let me fix it here. So weak low or weak high, or poor low or poor high. So what is a poor low or poor high? It's nothing but lack of excess, nothing much but lack of excess here. So what is the major difference between that? I mean, from the trading perspective, both are done by traders only. Traders are the one solely responsible for creating the poor lows or weaker lows. Most of the time, some short-term traders. Yeah, it could be many cases, it could be some big traders are coming and trading at those levels. They're the one who is entering at those levels. But it could provide a substantial amount of information from that particular day's perspective. Maybe let me tell you on last Friday, right? Last Friday around, I think around 10 o'clock is what somewhere we have got that confirmation. Now, my comment is that that day it can form like an AB power. That was my comment. Maybe I'll show you that. What was the comment I've been expecting last Friday? So we run a Slack community over here. So where we'll be talking about the market profile structures. Oops. Of course, AB power low. We track a lot of AB power lows, AB power highs. So that particular day, one of my comment around 10:20, right, is that I mean, was able to spot an AB power low around 10 o'clock or 9:45. I mean, after 9:45, I'm able to see this somewhere between 9:45 to 10 o'clock. I'm able to see this. Kind of a day low is a kind of a weaker low, but there is a tiny bit of chance that AB power low staying for the day. That means that particular day, that AB power low could be acting like a day's support for that particular day, right? So not in every case. Sometimes an AB power low will form, but end of the day, it may not be an AB power low. But that particular day, we had thought that maybe this AB power low, the odds of staying could be there. And even after some time, I just confirmed in one of the live sessions, right? One of the live sessions that we've been doing, in one of the live sessions called Option Hydra. So there I confirmed that the odds of AB power low staying is increasing. Means this particular day you have to focus more on the long side, because the chances of AB power low is now increasing. And end of the day, it ended up like an AB power low. Initially we anticipated, so that's around 2:30 also. My comment was like odds of AB power low staying is here. So that's what my people also commented, like AB power low holded, right? So people also looking into the structure. Structure has been more and more emotional. The last Friday we had almost 4 anomalies. So what does that indicate is that we are right now in a overheated markets. We're totally in overheated markets. Probably something like price breaking this 12,000 plus levels, and afterwards bringing some excitement. Already a lot of excitement is there. So right now we are in an excited markets, kind of euphoric markets, we can say. Like we are in an euphoric markets. Maybe we might be breaking immediately, we might be breaking that 12,000 plus levels, but the odds of 12,000 plus levels sustainability is very challenging. Maybe we can expect price to come back later on, and in a very short term we might be pushing towards probably towards this 11,780 kind of levels in the next week. I'm expecting these kind of structures. I'm expecting this because we are dealing with kind of an overheated markets. This market is right fully loaded with traders. Traders has been substantially initiated in this trend. So traders has been totally competing in this trend, and now more and more traders has been joined in this trend so far. If you read the complete structure, you could have been able to see this. You can able to feel that euphoric markets. So how we can play this kind of structures? Maybe we can use couple of option strategies. Like one of the simple option strategies that we can use is like you can go and use some weekly spreads. So this is one of the spreads which I've been planning to initiate probably by Monday. Like say 11,000, 12,000 put option buying, and we'll be hedging with a short put of 11,750. So margin comes down, your net overall cost comes down to less than 100 points. So what is the spread cost over here? The total spread cost comes to, so 142 minus 48, right? So roughly the spread cost is roughly 94. That means the max stop loss is 94 points. And if the price falls down, you can able to get a maximum of how much? Maximum of, here is the 11,718. So 11,718 divided by 75, that points out to how much? It's, 11,718 divided by 75. Points to some 156 points of profitability is what one can garner in this particular structure for the next week. So very interesting zone right now we are in. So maybe we are in overheated markets due to the various reasons. Various structures has been looking weaker. Most likely, I'm also looking into one of the important levels. Maybe we can focus on something like, let's do some top-down analysis here. So what we can do here is, let me pull up for a simple sake. What we can do here is we go to the trading view. So before to that, there's a small promo to talk about here. Right, so we've been doing a mentorship program on market profile and order flow. The program name is Tradesla 3.0. It's an 85 plus hours of online mentoring program on market profile and order flow. It is generally for traders whose nature is short-term trading and very, very short-term trading, who want to experience the nuances of market profile and order flow, who want to know more and more about how traders think and how investors think in these markets, and how we can convert those traders' behavior and investors' behavior into a trading edge. Where we'll be doing closely 20 days of live training sessions, morning 1 hour and afternoon 1 hour live training sessions will be there on the trading days. During trading hours, there will be a live sessions. And weekends, we will be having, we'll be talking about more structures, right? So how to analyze these structures. We'll be talking about a lot more case studies. We'll be starting everything right from the basics. And on to support, we'll be doing a lot of video drills as well. We'll be doing a lot of market profile and order flow video drills. And of course, you'll also get access to the previous recorded courses as well. And you also get access to the community access and a lot more access to our proprietary tools, or probably you'll be getting more access to the complimentary sessions on market profile. I mean, some of the Ninja Trader sessions, semi broker sessions. So those kind of sessions also you'll get access to that this time. So it starts on October 17th, 2020, right? Now let's come back to the topic here. We've been talking about this weaker highs and poor highs. So let's focus on how to prepare for this series. Let me go back to, in order to prepare, right? We can focus on next week view, like how we can take a next week view. A very simple tools I'm going to use over here. I'm going to use something like, I'm going to go to the trading view charts. So let me go to the trading view charts. Of course, the tradezilla.co, you can go and find more details about the program. There is a brochure there. So it includes the pricing, what is the syllabus, what is the agenda, what is the timings, everything is mentioned in this brochure. You can go and check out there. Let me now go to the trading view here. Let me pull up Nifty futures. Nifty futures is what I'm going to pull out over here to do the top-down analysis. The fun part is that TradingView these days, they provide access to Nifty futures, MCX futures. Of course, they don't provide options, but you can get mostly access to all the live data over here. Let me start with the monthly structure. It is always good to start with the monthly structure here on the Nifty contract. So what they provide is a continuous contract. And of course, I'm also using a super trend kind of indicators. You can find this indicator, right? The indicator is available. If you go to marketcalls.in, marketcalls.in, recently I discussed about this code. It's a Pine script code, by the way. So using this code, you can apply it to your TradingView program, and you can have this simple super trend indicator. Right. So here you can get this code over here. You can copy this code and you can use it in your Ninja Trader program. And of course, you can also send alerts to one of our platform called Algo Mojo platform. So here, let me go to the control settings. I'm using a super trend indicator, right? It's kind of a very simple trailing stop loss indicator. So I'm using an ATM multiplier of 1 and 10 on a daily time frame. And here I'm going to remove some couple of, let's say I'm going to remove the trades on the charts. I'm also going to remove the signals, quantity, everything I'm going to remove from the charts. So only I'm just getting a text of buy and sell informations here. Let me start with monthly. We'll try to understand what is happening on the monthly time frame. Monthly trend is clearly on the upside. Last couple of bars, it's been on the upside. And weekly as well, it's been trending up. Last week we had broken one of the very important highs, right? Very interesting one. It's also turned to be a buy mode as well. This is on the weekly time frame. And on the daily time frame, if you see the daily time frame here, the daily has been, it's going on a buy mode since 28th of September onwards. It's been continuously on a buy mode. So last week, the level has been stay staggered around 11,716, which is going to be a very, very important level. Maybe we can consider that as a very important level for the next series. Maybe we might be nearing those levels. I guess we might be trying to take and support, or maybe coming very close to that levels, even maybe breaking those levels marginally also. That kind of level, that kind of things has been possible next week. So next week is going to be a very crucial level where potential trend change can happen in Nifty, because we are kind of we are around kind of an overheated markets. So maybe I'm not expecting anything beyond 11,700 or that, but at least I'm expecting somewhere around nearing 11,700 or breaking the 11,700 kind of levels. I'm really thinking that we may be breaking this 11,200 as per the profile structure. We are at overheated levels as well, because you see that the last couple of days, right, prices one time framing on the daily charts, prices continuously keep on making higher lows without breaking the previous time frame. Last 10 days, it's been continuously one time framing. More traders, not only traders, more investors also piled up in this trend. And now we are looking at a very critical structure here. We are looking for a turnaround. The odds of turning around is pretty much increased. So much of euphoric levels now. So maybe we might be breaking on the upside 12,000 plus levels, and then immediately we might be. Maybe when I say immediately means I'm talking about maybe on Tuesday or Wednesday, the chances of market taking an downtrend is nearing. One another important thing is that the moratorium, right, that interest on interest, it been keep on dragging and dragging and dragging. Last Friday we had an RBI policy announcement. RBI maintained a status quo. Nothing much changed from the RBI policy, and market took little positively. But whoever competed on last Friday, more and more emotional traders, they jumped into the trade setups, and now the odds of price correcting from here towards 11,700 is been increasing. That is the reason we are going for a kind of an vertical spread, right? So if you are, maybe you can if you are a bit aggressive, can I go and trade naked longs? Of course, naked longs are not recommended here. Naked longs on the put side, right? So I'm not talking about buying a call or something, but I'm talking about buying a put. But to some extent, one can go and hedge it so that they can reduce their overall cost, because we're not expecting a big great downfall or something like that. Maybe it's also possible, but if you're not an aggressive trader, right? If you're a conservative trader, and if you want to approach the markets in a conservative mindset, and you're not a bit greedy also, in that case, yes, one can. Those who are even anticipating a trend reversal also, they can go and play these kind of spreads, because this increases the winning odds. Forget how much money we are going to make, but it increases the winning odds. At the same time, it is also kind of a risk controlled losses will be there. Something going wrong also, people can go and uh, exit at some stops. They can take a stop loss and then they can exit with a very, very minimal risk over here. So overall trend is up on all the time frame, but the thing is, like, it's kind of an overheated sentiment. And going forward, there are Reliance kind of there are a couple of weakness I'm able to see in Reliance, in TCS, right? So TCS now kind of an overheated sentiment is happening over here in TCS. Oops, this is TCS. So here is the TCS here. Even in TCS last Friday, it ended up like a poor low. Maybe if the structure is getting more and more on the downside, it brings in potential odds towards this destination. You see that one more power low is here down the line. That's maybe another, that could be another potential target levels. So contextually, yes, these two levels could be a monitoring level for the next week. Next week, if anything on the downside, maybe this prominent point of control and this poor low could be the next immediate downside destination. And for the next week, right? So price breaking this level in Reliance is going to be a very crucial thing. It can bring it can pull out a potential downtrend from here, maybe even towards 2100 kind of levels. 2100 kind of levels, because there was one more weaker low over here. Probably this is not the only weaker low over here. Sometime back down in Reliance, so there was one more weak low. I've been carry forwarding it. Right, it's at 2090 levels. This 2090 levels back in 8th and 9th September is again yet another weak low, which I've been watching for quite some time now. And now probably the odds of Reliance coming and testing 2090 in this October series is very, very higher. And Reliance, I'll be watching Reliance very closely from here on. A lot of levels I've been carry forwarding. Now these are the two important levels. These two weak lows are the one which are potential target destination during the month of October. Right, so definitely Reliance is already, you can start at feeling that weakness. The weakness is there not only in Reliance. Maybe if you go and check out the structures like let's say the small cap structures. I'm not sure how many of you watching small cap, but probably if you're an investor, right, you would have been watching this index, small cap index. Anyways, it is not the one which is going to drive the trend of macro markets. I mean, like Nifty or something, but nothing happened in small caps. Only excitement is seen in the Nifty 50 index. Nifty 50 last 10 days, it's been keep on going up. However, small caps, there are no action yet. I mean, investors in small caps are not enthused by the Nifty price action move. Not necessarily it has to be. But generally, when the broader market is rallying, right, almost all the markets should be rallying, but that enthusiasm is totally missing. And mid cap, let's see what is happening in the mid cap. Or maybe CNX mid cap is also more or less going sideways. And how about the other structures like CNX 500, the overall macro markets? Maybe, I guess, it's been trending up because CNX 100 is the total component, important component there. So there it is trending. However, the mid cap 100 and small cap 100 or small cap 250, there is no much of a price action movement at all. Only the enthusiasm is there only in the broader level markets. However, it's not there in the small cap stocks or in the mid cap stocks. So which is one thing to notice, which is also a dangerous thing also to be considering and going forward. All right. So my view is that probably next week we might be seeing some profit booking, maybe towards 11,700 levels we can expect. I don't know what is the support, but there are supports has been a bit far away. Supports has been there in Nifty. Nifty, if I see the supports, one important thing is that a lot of prominent point of controls has been there. I'm able to see a lot of prominent point of controls. That means I'm expecting an price crash towards maybe positionally next series could be something like this we can expect, which is a dangerous thing. But something like a support zones, we have some strong supports coming in around probably around this 1st to October. We had some supports. That's what we can see here. But something crazy can happen this series, right? So prepare for any stronger downside as well. So whatever the market showed, it's just a price based activity. Investors are crazily going mad about these structures. Maybe you can consider that as a kind of a warning also. Maybe that could stop by next week, maybe by Monday or Tuesday, somewhere it will stop, and we will be rolling back up on the downside. Maybe we are starting a downward journey. Maybe for the next week, maximum expectation is only this, but probably for the upcoming weeks, it could be something like this, right? So because more and more weaker players are joining and trading this game, and it's something kind of a warning is what we should consider here. And maybe we are nearing the peak, and probably towards this election results, right? Maybe we might be holding this for election results, but something like this towards 11,200, chance of happening for this series is very, very high. All right, maybe from here, maybe some temporary bounce can happen, but chances of price coming and dropping towards these levels are very, 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 very higher. I'm not expecting this to happen in day 1 or 2 days or 3 days or 4 days. Maybe this entire October series, we could be dragging down, right? So that odds are very, very higher. Maybe despite all the negative news, we had rallied. Now we don't able to find any negative news over here. But chances of now this kind of bigger price action happening is very, very higher because of the multiple structures, multiple nuances which are aligned in this trend. Because of the structure here, right? So mostly symmetric structures is what we are able to see. More and more such kind of structures are there, and now more and more emotional structures has been coming and competing. Mostly it indicates the signature of now weaker hands are coming and playing these markets. More and more momentum traders last Friday, they came and competed, and that is totally a damaging thing. In a very, very short term, trend reversals are quite possible here, and we are at a very critical stage in the markets here where trend reversals are highly possible, either from Monday onwards or from Tuesday onwards. It's highly possible there. One have to be very, very careful at these kind of structures. All right. Yeah, my view is totally focused on the short side. And yeah, maybe after breaching the 12,000 plus levels, I might be considering where to take a stops. I might be considering that. Or instead, I prefer to go for an something like an kind of a hedged strategy with low risk kind of setups. And that's the view here. Let me take a couple of questions. I guess we can stop the session here. We'll take a couple of questions. I guess you learned something new in this session. If you learned something new, or if you learned something what you haven't earlier realized about these kind of structures, you can simply type yes so that I can understand how many of you. All right, let me take a couple of questions here. If you have your questions, you can just simply post your questions here. All right, great. Not many yes. Thank you. Umesh is asking, can you use this trading view indicators in normal charts? Those who don't have an account with the broker, which you mentioned. Yes, of course. See, these days we are living in a technology era. So we're not handicapped with charts anymore, because not only from the brokers, outside the brokers also technological advances happening. Like the platforms like TradingView is getting more and more matured, and yeah, I mean, last time I heard mostly 40 million users has been using TradingView platform. So more and more Indians are also getting adapt to charts, who even if your brokers are not providing access to charts like TradingView, you can straight away start using tradingview.com. It's more of a free platform as well. And even not only that, their plans are cheaper as well. So yeah. So what is the significance of poor high and poor low? This is a question from Ketan. How to use poor highs and poor lows? So poor high and poor low is one form of a visual reference level. What it indicates is that it shows the presence of traders. So many people might be asking, can I use it as a stop loss? Can I use it as a target? Let me tell you that it is something different. We don't use like that. We try to use that to understand the overall market context, right? So something which is different from, maybe if you're 1 year, 2 years in the markets, right? Maybe many traders who are beginner level traders or entry level traders, they don't focus on the context. Rather, they focus on what? They focus on the entry. Where is my entry? Where is my exit? So these kind of poor highs and poor lows are the basic foundation for understanding the market context. If you want to know the puzzle, right, piece of the puzzle, these are just nothing but the piece of the puzzles, piece of the building blocks of the puzzles. So these are one clue that what you can understand what happened last Friday, right? So if you want to know in the entire trend, what kind of traders we've been competing with, are we competing throughout the structures with traders? If you want to decode the markets, those poor highs and poor lows will help you out in understanding the structures. There are places, yes, poor highs might be acting like a strong support. There are cases poor highs will be acting like potential targets. So really, we cannot comment on how to trade these poor highs. Every time it differs. That's what I can say here. But when you try to collectively watching this information, you will be able to understand how you have to position yourself. Like right now, I see this AB power law which happened on last Friday as a dangerous thing. So that maybe that could be a critical turning point here. We are nearing a turning point, and in a very, very short term, maybe next week, the chances of Nifty reversing from here in couple of days, maybe not necessarily it could be Monday, but chances are still higher. Because always a fresh turn happens in a fresh week or a fresh month. So how we can use poor highs and poor lows? Can we use it like a simple target, simple stop loss? Absolutely no, we don't trade like that. It always has to be watched with the other surrounding informations. So that's the answer. There are no direct answers here. It should be always watched with the context. Every time the combination of structures is what more important here. Looking into the poor high, can I go long? Looking into the poor low, can I go short? That's how it should not be interpreted, right? So there are no direct answers here. Where to find this indicator? This is a question Anup is asking. I'm not sure whether he is asking about that super trend or market profile. If your question is about market profile, I've been using Bell Market Profile Ultimate. I'm using from Bell TPO. The tool what I'm using is Ninja Trader. On top of Ninja Trader, I'm using belltpo.com indicator. Or if you're asking about that super trend one, you can just Google, you can just search in the public indicator. TradingView supports public indicator. Or you can also find it from the market calls. Market calls I showed you. Go to marketcalls.in and you should be able to get it from this particular tutorial, like how to send automated orders from TradingView buy sell strategy. So whenever a buy or sell is happening, how you can send automated orders. That is what you can use this code, and you can copy this code and you can paste it, and you'll be able to get the super trend indicator. Right? This is a code. You have to copy it and you have to use it inside the TradingView Pine script. It supports something called Pine script. So maybe I'll show you. So copy this code. So copy here. There's a small icon here. Copy it. Go to the Pine script. Here there's a Pine script editor is here. Just copy and paste it. Maybe save it as a file. So save it. Give the name super trend algo mojo trading strategy, right? So algo strategy here, and then save it. So it'll be saved under your cloud, and from here you'll be able to right click, go to indicators. Under your indicators, my scripts, you should be able to find just simply type super trend. So algo strategy. You see this up arrow and down arrow, that means buy and sell signals. If you are seeing this, that means it is a trading strategy. It's not an indicator. It is a strategy which contains rules and which is back testable, by the way. So now you'll be able to get this information. And there are a couple of controls here. You can go to the controls and you should be able to control these inputs. Like if you want to change the ATR period or multiplier, I said the multiplier which I'm using is ATR multiplier 1. And if you want to remove the trades on the charts, so this is where you'll be able to get the settings. All right, looks pretty cool and very interesting also. I guess very soon you'll be able to see in your broker terminals as well these kind of indicators. Or maybe broker might be already in the process of integrating these kind of indicators on your trading view broker terminal. These days broker terminals also, many brokers, they offer trading view charts like Zerodha, Upstocks, TradeGenie, and various brokers, they started offering trading view as a terminal. But the thing is that Pine script is available only in trading view, right? As of now, brokers, they cannot have the access. Maybe if you give this code to the brokers might be integrating this code in their platforms, right? However, yes, you can also trigger alerts, and from those alerts you can also send automated orders as well. Maybe we can look into that in a particular different section, but as of now, so these are the two tools. Yeah, maybe if you're thinking about, if you're asking about that. Vishal Rajgaur, poor low is the only reason you think that there could be a downside? No, of course not. Poor low is not the only thing. There are a lot of combination of structures. I'm looking into that. This prominent point of control over here, this prominent point of control over here, the other prominent point of control over here, and a lot of symmetrical structures, and the AB poor lows and last Friday structures, a kind of a stealth auction, and poor structures. Many combination of structures are the one which I'm thinking that we are very, very close to the top. Maybe I'm just thinking that once in a while, the 12,000 is one thing which is very closely I'm watching here. I mean, it's kind of an investor reference 12,000 level, because there was one island gap reversal is there. Maybe after clearing this 12,000 plus levels, maybe if the price is not sustainable, somewhere near to that, we should consider looking for a shorting opportunity there, right? Or if you're a trader, option trader like me, yes, you can also invoke after touching this 12,000 plus level. It is not an immediate trade, but after touching 12,000 plus levels, one can look for a bear put spread, right? I might be initiating a bear put spread there. All right, so let me take a couple of more questions here. So Makesh, missed the difference between weaker low and poor low. Can you recap? Of course. So here is the simple example which I have given over here. Poor low is only for that particular day, right? It can be an intraday double top or intraday double bottom. Whereas weaker lows or weaker highs are more to do with exactness. We had seen a lot of exactness examples, right? Exactness around previous day high, exactness around previous day low. At today's open, half back, right? Early morning high, early morning lows, yesterday's close, peacock levels. Whatever I've showed you is only a sample over here, but the amount of weaker lows information goes on and on and on. Right? Anyways, with that we'll be covering in the trading view. I mean, Tradezilla 3.0 we'll be covering, and as I said, in the October 17th, we are starting with a session here. Anyways, I'll say thank you for coming by, and thanks for spending your wonderful time with us. Stay tuned with Febina's team. I mean, if you have any queries on the upcoming program on Tradezilla 3.0, check with our Febina's team. They will help you out. And all the videos will be posted to our Market Calls channel as well as to the Febina's channel as well. Thank you once again, and I hope you learned something new in today's session. We'll see you in the next week with another interesting session. Thank you.